healthcare has been a tough sector. People always talk about the need for healthcare, but within the sector, we've seen diverging performance. Let's bring in Rob Moffat, Portfolio Manager at Middlefield Group, where he focuses on the healthcare sector. Today, we're going to talk about medical technology, so devices in healthcare. But just talk to me about the landscape so far this year. What's been driving it?
Yeah, so healthcare has lagged this year. I think that's because a lot of investors were positioned quite defensively coming into the year, thinking that a recession was probably pretty likely. And then as we've progressed through the year, inflation's been coming down. The labor market has been extremely resilient. Everybody's still employed and their wages are going up. So I think people are starting to worry less about recession, and a lot of money that was kind of overloaded in defensive sectors like healthcare has started to rotate into the growth-oriented, tech stocks, consumer stocks, et cetera. So healthcare has lagged as a whole by the most actually in the last 3 decades on a relative basis to the S&P. But there are a few areas within healthcare that I'm still very positive on, and specifically that would be medical devices or MedTech.
Why?
So MedTech companies had a tough 3 years. They were heavily impacted by a lot of COVID disruptions. It was very difficult to operate a hospital with people coming in and out with COVID. MedTech companies were also hit quite hard by supply chain disruptions. They have global supply chains. It was tough to order and receive devices. They have a lot of FX issues. So those were the last kind of 3 years of headwinds. But looking forward and where we are today, a lot of those headwinds are now tailwinds. You have supply chains are improving. Hospitals are now able to operate back at full capacity or above average. And this is an area where people have kind of avoided going to get their knee or their hip replaced, but they're finally more comfortable going to the hospital and getting that done. So there's been a bit of a backlog that has developed, and there's some growth there.
In some parts of the market, this has already worked its way into the system. Let's take a look at Stryker, which is your first pick. It's close to an all-time high. Can these tailwinds carry the stock much higher?
Yes, I believe they can. So Stryker is what I think many people would regard as a very high-quality medtech company, and they are basically one of the most obvious beneficiaries of this backlog of elective surgeries that built up over the last 3 years that's now starting to work its way through. So management, even on their last earnings call, called out, they think that it's going to take them about 6 to 8 quarters to get through this backlog of elective surgeries. So I do think this set up for out-earning over the next few years is going to persist for the next couple of years. The other thing that's really exciting about Stryker is that they have what they're calling an innovation super cycle, where they're actually coming to market and launching about double as many of the products that they normally would in any given year. So over the next 18 months, call it, they're going to release about 17 new products, which
What's driving that? I hate to use the word, but is it AI? Like, is there advancements in technology that?
Yeah, so it's basically just a timing thing. They've made some savvy acquisitions over the last few years, so they're now investing alongside those areas. Stryker's mandate is really to be a category leader in everything they do. So, one of the biggest areas is their Mako robot. They're the leader in orthopedics robotics. And one of the launches that they're doing next year is they're going to launch a Mako for shoulder and probably for spine as well. So basically taking the same product and launching it into to new indications.
Now, Medtronic is your other pick, and it has not had the same trajectory as Stryker. It seems like it's a little bit in the penalty box here. Why do you like it at these levels? What story is not being well understood? Yeah,
so definitely in the penalty box. It's been impacted a bit more by the macro headwinds. So they have 50% of sales outside the U.S. So they have those macro headwinds I was talking about. But companies specifically, they've really had a few missteps with product launches. A few things that they had promised would be at market by now have kind of not made it there. They haven't been able to get approval for certain things. So clearly an out of consensus name. But I think a lot of those issues are in the rearview mirror. And if you look forward to over the next 12 months, similar to Stryker, they have a really exciting pipeline of new products coming to market. They have a product in cardiology with pulse field ablation, which is used to treat atrial fibrillation, which is a huge market. and they have a renal denervation product that was one of those that kind of misstep, didn't get across the finish line with approvals, but we should see that come to market this year. And I think that the management has done a good job. Last year they had to cut guidance and they missed a couple times, but they've done a good job of setting expectations conservatively. I think they're well positioned to, at the very least, meet and probably beat their guidance for this year. And the valuation that it's trading at is really not very demanding. It's trading at about 17 times forward price to earnings. Most other medtech companies are kind of in the low to mid 20% range, so a pretty big discount to its peer set.
I guess when you have this track record of management missing their targets and their deadlines, that could still happen.
It certainly could, and this is no question a show me story. But given where the valuation is, I think
it would sell off as much.
I don't think there's a lot of downside protection. It's certainly not a consensus long like a Stryker would be. Like if Stryker came out with bad news, that name's going to sell off a lot more than Medtronic. Whereas I think that the bad news is going to start turning into good news, and it'll gradually gravitate towards back to where it was trading, which was $120, $130 range. So. If they can execute and come out with some good news over the next 12 months, I think that the stock has really good potential to re-rate.
Dickinson.
Yeah.
It's off the tongue, but it's basically flat so far this year. Another medtech company. What is the play here? Yeah,
so Becton Dickinson is really what I would describe as giving you defensive growth. So Becton sells kind of the picks and shovels of the healthcare sector. They sell needles, syringes, catheters. 2/3 of their sales actually come from products that are under $100 price tag. So it's really a low risk way to play medtech, and it's defensive. But similar to Stryker and the other two companies I talked about, they've been focusing more on the areas within their portfolio that has growth over the last few years. So, I think that Becton they're kind of.
Look at that chart. I mean, the 5 years is so choppy.
It seems like
so much
bound.
volatility to go nowhere. On a longer term, it has moved significantly higher. But then in 2018, it's stuck.
Yeah, that's correct. I mean, it's a pretty interesting pathway to go nowhere over 5 years. But
So is it a trade, or do you view it as a?
No, the thesis is this stock has the potential to break out.
Okay.
It's trading. It's giving you 6% organic growth. That's their guidance this year, and it's trading at a 4-turn discount to other medtech companies that are also providing 6% growth. So if it were just to have the same multiple as peers with similar growth, it's going to be trading above that channel that you're looking at there. And what's going to get it there is kind of investments in growth that they've been making. They've been investing more in R&D. They've done $3 billion of M&A over the last couple of years. They're going to do another 1.5 to 2 every year for the next few years. So they really are focused on bringing up the growth profile of the company. And if, similar to Medtronic, if they can execute and bring that 6% up to 7 or 8, this stock is definitely positioned to break out above that channel and trade above $300.